Traders, I look forward to outlining and sharing my top ideas for the upcoming week, including my precise entry and exit targets. Now, last week was obviously a very rough week for the overall markets, with the only sector that actually managed to close out in positive territory being the energy sector, looking at XLEs there. And we continue in the overall market to see a pattern of lower highs and lower lows. In SPY, for example, right here, with 600 being the all-important area of resistance right now, where we confirmed a lower high last week. So in the short term, we definitely are experiencing a normal correction right now. No need for major panic. And it's vital, as a result, going forward, to be ultra selective on the long side, really only targeting relative strength names for directional swing longs, if anything. So it's important to be aware of that during such a pullback and correction like we were seeing now, because the likelihood of breakouts working certainly decreases, especially if there is not relative strength there. There's also a cyclical shift that's occurring with small caps right now, with the average change from the open among gappers last week, meaning certain criteria, falling into the negative. So with caution and really relative strength in mind, and stock selectivity, with that all in mind and not looking to be too aggressive for the upcoming week, this is what I'm looking at on my watch list. So first of all, I'm looking for a short in Bitcoin, just in terms of move to move and momentum. So as a result, looking at IBIT, the Bitcoin ETF. So what's the plan here, and what specifically am I going to be looking for? So before I go over names that are showing relative strength, I'll go over that after this. One area of focus is going to be looking for momentum short in Bitcoin if we're able to get below the all-important level of 92K support. And so a bit of a head and shoulders pattern, albeit fairly messy, has developed with left shoulder, we got the head, we got the right shoulder, the neckline being 92K in Bitcoin or 52 in IBIT. If Bitcoin does break below during regular trading hours, 92K, then I'm going to be looking for a reactive momentum short as long as we're holding below 52 in IBIT. Momentum trade in IBIT targeting a first off move near 50, the next area of potential support where we could see some demand come in. Now, let's look at some names that have displayed relative strength to the overall market, bucked the overall trend and relative strength to its sector as well. So starting off with a couple names in retail, ONON. Now, ONON here, it has bucked the overall trend in the market. It's displayed relative strength to the market, but also obviously to its sector. And going forward, I'm going to be watching for the trend to continue in ONON, and ready for the stock to continue to base above its now rising 20-day and 5-day moving average. Now, if we can successfully hold this 20-day moving average area around 5660s, 5650s, if we can continue to base and hold, and then take out the high around 57s, that's when I'm going to look for elevated Orval, look to see if we can spend some time intraday above 57s, developing an intraday uptrend. That's when I'd look to get long versus the low of day, targeting a move anywhere between an ATR and the stock's 52-week highs near 60 for a multi-day swing. Next up, ANF, another name, obviously Abercrombie, another name in retail. ANF, another name that again has displayed relative strength to the market. And overall, I would say with these retail names, it's certainly not my favorite sector, favorite stocks to trade, even from a swing perspective, or even momentum or intraday, on days like earnings, for example. Not my favorite to trade, but given the technical positioning of the stock, as well as the one we just went over, it's worth a closer look. It's worth some alerts. So from the weekly in ANF, we look at the weekly chart all the way down to the daily, and of course we can go lower to the hourly as well. Resistance and the overall bullish setup shines through across multiple timeframes. I like that. It's been in consolidation for 5+ months, with 150 now significant support, aligning with several key moving averages, and 164-ish acting as the critical resistance and potential inflection and breakout area. So I'm not buying right now in this consolidation, but instead I'm going to have some alerts set for the upcoming days, to see if we can get above 164 and hold above 164, and then look for a potential entry if it does take shape like that. All right, next up, shifting gears, now moving over to semi-sector, SMTC, more of a small to mid-cap. Obviously, we know SMH, significant breakout last week, which failed breakout higher, fast move lower back into the range, certainly not bullish. SMTC, however, displayed notable relative strength. to the overall sector, maintained in close proximity to its 52-week highs. And it's one small to mid-cap name that's fairly interesting to me, and I'm going to keep it on my radar going forward. I'm not looking to act immediately. Rather, I'd like to see it continue to build above its now rising 20-day moving average. So it's on my watch list for the upcoming week. Again, I'm going to keep tabs on it, and if the stock can continue to base above that 65 area, if it can continue to form in the coming days, and maybe the range can contract further, therefore increasing the RR and making it a little bit more skewed in my favor, and then break above last week's high around 68, that for me would be a trigger to go long. Initially, I'd look for a 1 ATR target, 1 ATR up move. That's where I'd look to cover up to half of my position and then trail the rest to see if we can gain some momentum above 52-week highs. And then lastly, as it relates to relative strength, NBIS is another one. Software AI infrastructure play here. Relative strength to the overall market, to the sector last week, closed up almost 9% on the week. And since the stock started retrading in October, a very steady trend has formed where most recently what I liked is how we're able to build and hold over 26, turning an area of previous resistance into support. We've now confirmed a higher low more recently above 29, above 30s. So overall now, I wouldn't be looking to chase highs if we had to push above 34 on Monday. The risk reward in that sense would not be skewed. Where am I risking to? Where am I wrong? So that certainly wouldn't be a setup that I'm looking for. But I like how this picture is starting to come together. And so what I'm going to be looking for in the short term, in the coming days, week plus, is for this setup to continue to form, continue to build, continue to show relative strength and some outperformance. And then ideally after a few days, a week plus of consolidation, we get further contraction, perhaps between 32 and 33.50s, 34. Again, therefore really skewing that risk reward in my favor, allowing for consolidation breakout, where my risk is more well defined and the risk reward can be stretched further. So if that can happen and we can contract and build a little bit further, then I would look for a breakout above 34, risk to the day's low, which ideally in that regard is 33.50s to 33, and look to capture multiple ATRs. So need to see that build further. Lastly, we saw another theme emerge last week of great relative strength and outperformance to the overall market, a sub-industry within the energy sector. And that was in alternative energy names, CEG being one of them. Not looking to chase the highs, VST, GEV, TLN. And so very impressive outperformance last week. I'm not looking to chase 52-week highs, but what I am looking is to just keep tabs on them, see how this develops in the coming days, to see if we get higher lows after a pullback, and potentially a better risk-reward opportunity to take advantage of this momentum if this theme is going to develop further. And then just some additional back burner ideas for the upcoming week. RGTI and other quantum names, of course, main a focus and talking point from last week. But I'm not looking to jump in front of a freight train here. I'm not looking to pick a bottom. Yes, we've come off a lot, but where are we and where have we come from relative to that? And I'm certainly not just trying to blindly buy this because of the immense sell-off from 52-week highs. Alternatively, I'm more interested if we had to get any significant gap down in capitulation, which has not yet happened, and volume to confirm that. Then I'd be interested in momentum, intraday bounce, potential reversion just intraday relative to the previous day of selling and levels. But the bigger opportunity for me is really being hands off at this point. The short has played out, and looking to see if we are able to get 2 to 3 to 4 day grind bounce action, setting up a potential short opportunity with better risk reward. So hands off there, but worth mentioning because just the immense attention that they had last week. More intraday standpoint now with some small caps. Just to shift gears to end it off, DATS, great one from last week. And with that, this is just going to be on watch now for any pops to short versus the high of day, as long as it fails to build above its multi-day VWAP and as long as it remains now below Friday's high. So if we do get any pushes above 650 and fail, I'd look for an intraday move to move short versus the high of day, as long as we don't hold above VWAP, and of course, as long as that initial push higher, we don't take out Friday's high. And then lastly, SILO, just more on watch, along with the current theme with small caps, which is liquidity traps and exhaust moves higher to take out stubborn shorts. On watch for a similar type of move to SPI from Friday, for example, to see if we're able to break above 2 and get a quick push towards 260s, 280s before topping out yet again. So that is everything that I have on my watch list for the upcoming week. Certainly a good week to take stock of how things are moving, make the necessary adjustments, and let me know, as always, please, what you are watching mostly for the upcoming week. What's on your watch list? What are your plans? And of course, if any of the names that I have on my watch list are on your watch list too, but perhaps we have differing plans and opinions. So drop that in the comments. Thank you all very much, and I will see you all again next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.